By to give us all the details. Another strong day on the JSE today, Makwe, just over 1% to end off the trading day. We're seeing gains across most of the local bourse, resources showing another strong footing, financials doing well as the industrials. That is some of the news on the local front. What would you say were some of the other contributors, but also some global ones, if any?
I think markets continue to be resilient, as we've seen yesterday, and continue to brush off this issue about spiking oil prices. And I think this on the basis that, as we've seen, that the Reserve Bank of Australia today decided to pause. So markets are saying some central bankers, they are almost very close to do what the Australian Central Bank have done. And remember, we've seen that the economy slowing, we've seen the manufacturing activities not being impressive in South Africa, in the US, in the Eurozone. So markets think that, listen, at some point, these guys have to pause. So those bets, that are helping markets. But we are seeing that later in the sessions, especially in the European markets were starting to go down because of the job openings were not that impressive in the US.
Yeah, and I want to just carry on that Brent crude spike that we've seen from yesterday, continuing on that rally. I mean, this would be great because the local unit has been performing rather well over the last 5 to 7 days, Makwe. But now we're seeing a situation where Brent crude is at $85 a barrel, tracking closer to $90 a barrel. So when it comes to us net fuel importers, we're not going to be seeing the kind of reprieve that we would like to be seeing in the coming months at the petrol pumps if we continue to see this kind of rally.
But definitely, and to put it into context, remember the cuts, they amount to almost 3.7% of the global demand. So it's a very serious cut. And that's if the guys continue to stick to the pledges that they've made. But yes, with the net importers, your currency continue to play a very significant role, as much as you are happy that the rand itself is below 18. But we can see now lately in the session was trying to weaken, because the minute people start to think that the US might not pause, then that will make the likes of the US dollar to continue to be attractive, and definitely we'll see the US dollar starting to strengthen again, and that will be negative for our currency.
Let's talk about some company updates out today, Makwe. We're seeing that Marion Roberts announcing that they're going to be getting rid of their Bombela consortium business. Obviously, another indication that the construction side of business is very tough, particularly here in South Africa, despite the various pronouncements by government around the infrastructure build and the like. Your thoughts on that, and really just the medium-term outlook for a company like Marion Roberts, which is going to focus more on mining operations?
You know, in an environment where interest rates are going up or interest rates are elevated, then by all means you should do whatever you can to pay down your debt. And we know the guys have been struggling under some serious debt, and the money that they'll be getting, which is almost 1.2 billion, and remember, is almost 125 million rands, less than what they expected, because they've received dividends around March. So they'll be using those proceeds to settle their debt, but still the guys will still have a debt of almost 1.39 billion. And remember, the company itself, the market value is just around 720 million rands. But going forward, the guys continue to focus on cash generative operations, and also their platform, which is more focusing on mining in Africa. They expect that to start at least showing some progress going forward.
And then some economic data that came through recently, Makwe, PMI, showing that factory activity continues to slump. This is just another indication of the severe implications of power cuts above and beyond the increasing cost of production, supply, as well as retail.
Definitely. And we know that even those who are trying to open is costing them an arm and a leg when it comes to buying that diesel price to keep the doors open. And yes, this whole thing is not sustainable. Even if you look into the retailers as well, the amount of money that they spend when it comes to diesel, all in all, load shedding is not going to be okay for the economy. Hence, we are saying, other than the global pressures, for the fact that we've got serious load shedding back home here, definitely we are heading for a recession in South Africa.
Sounds like a very tough time for many households indeed, Makwe. And then finally, this listing business on alternative exchanges like A2X, ShopRite announcing today that it will be doing the same thing following other big companies that have recently done so. What kind of value do shareholders get out of a secondary listing on an alternative stock exchange?
Secondary listing tends to help you in the sense that, number one, nothing changes when it comes to the share issue capital, but it's a question of you can be able to trade it like on the JSE. If not, you can go and trade it on an alternative exchange. And usually alternative exchanges are trying to bring competition to the main board. And in this instance, the settlement date, the speed, stuff like that, but it continues to be a very competitive market. And this is something which is happening globally to give people an alternative.
Yeah, absolutely. And of course, ShopRite also recently, Makwe, announcing that they will be opening a retail store for clothing, like the Pick and Pay clothing store that we have seen over the last few years. But we're planning to speak to ShopRite about that. Thank you very much, Makwe, for joining us this afternoon. That is Makwe Masilela from Makwe Fund Managers.